What is up, the YouTube fam? Wanted to jump on the Facebook YouTube machine and talk to you about what I call the infinite money loop. And this is essentially how you create wealth. And if you know anything about leverage or how to borrow against assets, this is essentially what you can do. And this is what I've been doing for quite a while now. And I'm actually going to kind of take it to that next level. Essentially, I have been buying a little bit of Ethereum and putting it onto a a lending protocol or a liquidity protocol. There's a bunch of them. There's Nexio, where you can borrow against your assets. There's Aave. There's one on Solana where you can borrow against your assets. And in doing so, you stake your Ethereum, Matic, Avalanche, whatever that is for you, and then borrow against that, which ultimately increases your buying power. Because if you're able to, say, deposit $1,000 and then borrow 50% of it, you have essentially $1,500 in buying power. And in doing so, you can leverage that. And the power of this, or the beauty of it, is that, say for instance, that $1,000 you have in Ethereum and the price doubles, you borrowed 500, so now you can either pay that back or you have more borrowing power, which is pretty amazing. So let's get into how this actually works, because I think I'm a visual person and I want you guys to see the amazing power of this. And so I made a little graph here, or I guess infographic, and in doing so, this is how this works. Let me actually pull up, if you guys have any questions, drop them down below and I'll answer them as I go. I just want to make sure that I can see any questions, concerns, comments, complaints that all of you might have. So with that said, we have our Bitcoin or Ethereum, and that is our vehicle that we can leverage. And you can do this with real estate. You can do this with stocks. This is how Elon Musk essentially bought some of Twitter. He raised money, obviously, and borrowed from the bank, but he also borrowed against the stocks. I think he also almost got margin called, so I think he had to sell some of those stocks. But obviously, there's risk involved. If the price goes down or goes, if the price goes down, essentially, then you can get liquidated, and that is a risk that goes into leverage. But essentially, this is how it works. You take your Ethereum or Bitcoin or whatever. If you have Bitcoin, you can say do Nexio. I'm not a fan of centralized exchanges, I guess. So for instance, like BlockFi, you could do this, but then they went belly up. So you want to do something that might be decentralized. So that would be like Aave. That would be like some of the other ones on Solana. There's a lot of different ones. It's pretty much pick your poison, pick your blockchain, and that's what Nexio is. And so, for instance, on Aave, you can use your asset, deposit it, and borrow against it. And so, as you can see here in this bottom right corner, it says borrow against your collateralized assets from across multiple networks and asset classes. I obviously paraphrased that, which was already short, but yeah, whatever. So what you can do, and I just put in $1,000, I think, or maybe, I don't know. I put some money in here just to show you real life examples of this. But essentially what you do is, I wonder if I'm on the right, no, I'm not on the right blockchain. Let me grab my demo wallet. And let's go to this one. Oh, and let's go to Arbitrum. And so, I think if I refresh this, it should pull up the Arbitrum blockchain anyways. Okay, perfect. So last week, this was at 2.86. Health factor. It has increased to 2.97, which then allows me to increase my ability to borrow against that asset. Obviously, if you go under one, or not obviously, but if you do go under one, then you essentially get liquidated, and that's not what you want. So the goal here is to have this as a positive APY. That way you're not ever losing money essentially, because the stable asset that is USDC is not going to fluctuate with the market. It's going to stay the same, but you're going to essentially pay interest on a stable asset, which is at 2%. But what I'm doing is actually pay, I think I actually have two loans. So I have one at 5% and another one at 7%. And by taking my money and paying down that loan as quickly as possible, I'm essentially saving myself on the APY. So instead of paying 7 or 5%, I'm paying 2.58, which is literally nothing. And it's like free money. And if you have realized in the last week, the price of Ethereum has gone up maybe like $200. And so that essentially raised my balance here. So I can either then take those profits and pay that off, which I'm not personally going to do, because that would defeat the advantage of using this infinite money loop. And so with that said, the goal here is to continuously add to this and continuously borrow against this. And if you're at risk of liquidation, you have an outside source that can backfill to protect your asset, so you're not getting liquidated. That's why it's also important to understand risk tolerance and health factor with Aave. So that gets us into right here. So if we look, we have our Ethereum, which we put right here. We then can borrow against it, and that is right here. So replace Nexial with Aave. And so now we have an asset that we are borrowing against. Oh, did I screw that up? No. Okay, so you have the asset that you're borrowing against. You can take 50%, and then you can take that and deposit it into your bank. Since obviously you want to talk to your CPA or a financial advisor. I'm not a financial advisor. I do not give financial advice. I'm just a troll on YouTube. But essentially you can, when you borrow against an asset, it's considered a debt and you can't tax debt. That's why when we borrow against our real estate, we essentially are doing a cash out refi, taking that money out as debt, and our tenants are paying down the actual loan, and we're not taxed on the debt that we assumed, I guess. And so we took that debt and then you reinvest it into another asset class. And so for us, that's real estate, that's cars. So a lot of people think that, well, it is a depreciating asset. Car is a depreciating asset, but it can create cash flow. And so we've been buying rental cars, essentially. I've bought like 3 cars, 2 cars this year. And so that gives me 3 cars that are essentially making me cash flow. And in doing so, I can then take those cars and put them on, say, for instance, an app. And that app called Toro or Hire Car, you rent them out and you take that money and you buy more of your original asset. And so what that looks like is I essentially take that and put it on Toro and get money from renting cars out. And so that's essentially what I'm doing here is I'm having the bank pay for the car, and then I take that money from the cash flow from here and buy more of the asset class. And then I rinse and repeat. Deposit back into Ethereum, borrow against it, put it to the bank, put it towards a loan, buy more cars, whatever that is. So that's how you create an infinite money loop. And you have to think like over time, if things are going well, especially during the bull market, then this price is going to increase, which is going to increase my health factor, which then increases my ability to borrow against that asset. And it just becomes an infinite money loop. And so you kind of hedge against your bet in a sense, because instead of borrowing USDC and buying more of Ethereum or Bitcoin or whatever that is, which say for instance, there's a huge drop in the market, then you're now lost money because as the whole market crashes like it did in 2022, if you borrowed against an asset and you bought that, then like say you bought and that whole thing crashed. Pepe wasn't around then, but I'm just giving an example. Then that asset that you bought is now lower than what it cost you for that debt. And that's no good. So that's why you diversify and you buy, say, for instance, real estate, cars, stocks, whatever that is. I don't say stocks because if it's a whole recession, the stock market's going to drop also, since kind of the stock market and the crypto market are kind of, they kind of go, they're coupled, they're not decoupled yet. But we're seeing more of it in a sense. But that's how you essentially create this infinite money loop. Buy an asset class that is going to bring outside capital into the blockchain. And that's what we're going to do with our NFT project, essentially, is we're going to crowdfund real estate, I guess, and take that and buy more assets, which then buys more Bitcoin, which then gives to our NFT holders. And that's how you actually create wealth. And that's how actual NFT or crypto projects need to think how they can actually bring in outside capital that isn't a liability within its own ecosystem. Because anytime a project, say crypto, their investors are also their liabilities. And if you are bringing outside capital that is outside the realm of the blockchain, then you are, that's not really a liability anymore, because you're bringing outside capital from a service or a product that are being used on a daily basis versus a investor in like crypto or Ethereum. So that's essentially it in a nutshell. So how let me show you real quick. I essentially let me pull up this website real quick. I borrowed against my asset, right? The 420 in USDC. I took that money and then I just wanted to show essentially how this works, but essentially I took that $420. I need to sign into this account real quick and show you kind of it in its full entirety. So why is this taking so long? I do have an account. Sign in and sign in. And so, like for instance, and I'll put a link down below. But essentially, what I did was I went to a website called Spritz. You can use an exchange, you can use whatever, but I offboarded my crypto using this particular website. I took that $420, put it towards my car loan, and in doing so, I was able to pay that down. And instead of paying 7%, I am now paying 2%. So let me pull this up real quick so I can kind of give you guys an example. There we go. All right, logging in. Let me grab that. Boom. Boom, boom, and let me switch this. Sweet. So essentially, I took my crypto from Aave. I just took the $420, put that towards my bank account, so I could have completed, and I put $200 a few weeks ago, like 2 weeks ago, $60 and $159, so that's about $420. And I put that and I paid towards my loan. And so I'm making more payments towards that, because then I can essentially just have my lien holder essentially be Aave and only pay 2% instead of 5 and 7%. and I never have to get rid of this asset. So if this goes up to 10,000, say in the next couple of years, I'm never losing out on the appreciation of this asset. And then, so that gets us to adding an Aave, offboarding it to a bank, which is what I did here. I then bought an asset, which is car rentals. I have 3 cars now. And then I take that and I buy more Bitcoin with it. And so essentially what I'm doing is leveraging few things, 2 asset classes, so real estate and crypto, to create more wealth. And in doing so, you're able to continuous that loop. So like I said, I have 3 rentals, real estate, and then I have obviously car rental. So I bought 3 cars because one, they're depreciating assets, so I can write that depreciation off. So it's more of tax harvesting. It's higher cash flow than say real estate, because of one, the ROI is much easier. It's not amortized over 30 years. It's only a 7-year, 72 months loan. And I can pay that off really, really quickly. And then essentially just use the extra cash flow. I don't have to wait 30 years. I can wait 2 years essentially, pay that off, and then keep acquiring more Bitcoin. And the beauty of it is if I were to say buy take that USDC and buy more Ethereum, but the whole market dips, I can't really recover that. However, what I can do is, since I now have an asset, say real estate or crypto or a car rental business, I can then take that and buy in DCA essentially at a lower cost as the price of Ethereum drops. Say for instance, we go through a bull market, a short bull market, and the price drops or tanks. I'm now able to take my asset that is producing cash flow to buy even cheaper Ethereum to protect my liquidity, because then I can add it to my Aave account, which then increases my health factor. And so that's how essentially we create wealth, is leveraging multiple asset classes and borrowing and create leverage. So that's it, guys. I hope this was helpful. Remember to like and subscribe, and I'll see you in the